Hi, everybody tuning in. So, this is a pre recorded clip, but I will be available in the live stream within TradingView, the live chat. If you have any questions, I hope you enjoy. And yeah, let's kick things off. So, we're going to start off like we usually do with the dollar index. Like to have a look at the dollar, it gives me my broad overview. And we can see some dollar strength here. Quite surprisingly, we got some good news of talks between Macron and Putin last night, which should actually help risk sentiment. Um, Maybe it's just traders sort of positioning pre that inflation print, expecting some strength there, and maybe a repricing in interest rate expectations, and that could be driving the dollar higher here. Um, we just below that trend line, we're trying to get above it. Also, there's that horizontal support which formed the range around the 19th of November through from last year to now Feb. And that sits at about 95.5, a nice round number there. We've also got a bit of resistance in the form of the 50-day simple moving average and the 21-day exponential moving average. The RSI's turned back up. I've got a 9 setting on this the dollar index just because it's a bit more sensitive and reacts faster. Targets wise, that would be my first level to target just below 96 around the 50-day simple moving average on the upside. Below that, any retracements I'd be looking towards 95, the round number, and 94.5 here support. Moving on to Euro US dollar, we can see, the RSI drew this in at 62.55. We can see it's rolling over now. We're getting quite a good turn back lower. I've drawn this little horizontal support here too. So it was basically a combination of the horizontal overhead resistance and then the downtrend line, the upper trend line of the descending channel. Targets wise, the former range resistance at 113.6, 113.5. Below there, we've got basically the 50-day simple moving average at 113.2. Which would also be key levels to look at on the downside. On the upside, if we break through this level, 115 would be my first port of call, and then 115.2, which is around here. There's a bit of support there, and above there, you've got the 200-day simple moving average. But right now, after that massive shoot up we saw, I think we're going to see some profit taking on the Euro US dollar. Moving on to cable, drawn in here some Fibonacci retracements. We saw price hold at 61.8 level. It was also 134 round number. We saw that level tested back there in September. It was also just below the 50-day simple moving average, so acting like a bit of a magnet. We're now at the 38.2 level, and we've got the 21-day exponential moving average providing a bit of support. We saw price rally into that 200-day simple moving average and come back down just above the descending channel upper trend line. Again, price got up there, touched it, came back down. The RSI at the 60 level, you can see previous price peaks up against that upper trend line. It got up to 61, got close there, and again right there. Now we've seen it again happen here. So that could be a nice short sort of indicator for you to utilize. EURGBP, again, another shoot up high off that hawkish pivot by the ECB. It just got above this sort of 50-day simple moving average. The RSI, again, runs into this wall of resistance around 64. We can see it on previous price peaks. It's working quite well. And we've got the 200-day simple moving average above there. If price was to push higher, that would be my initial target around 0.85. On the downside, I'll be watching price around the 50-day simple moving average and the 0.84 round number. Below there, again, if we break through that, it opens up this basically this level here around 0.835, 0.83 where we got down, which I actually thought could break on a hawkish BOE, but obviously a hawkish ECB shattered that idea. That's why we have stop losses. US dollar JPY, again in this sort of range, moving sideways. The RSI is trying to creep higher. It's making some higher lows. Price is also making some higher lows. And this is actually, if I just quickly draw in a little trend line here, this is what you call a flat-sided ascending triangle. So making higher lows, but the highs are sort of flat. It's horizontal resistance, and usually what we tend to see is a break higher from here. And the target would be basically a projection. Let me just find the arrow, geometric shapes. Where are you? If I just extend that, there we go. Arrow. Haven't had my coffee yet this morning, ladies and gentlemen. Sorry, struggling. So if we project this upwards from here, that target from about 113.5 to 115.5, and we project that up from here, just move that arrow from the breakout area, we're looking at about 117.5. That would be the target if we were to break on US dollar JPY. Then moving on to AUDJPY, I actually put a trade idea out on TradingView yesterday on the 4-hour time frame. I was seeing a little inverted head and shoulders. I'm quite liking this reversal higher here. The RSI's got plenty of room to run before we can consider it overbought. There is a bit of resistance here, obviously at the 82.32 mark, and it's the 200-day simple moving average. So it's kind of between those two moving averages at the moment, the 50-day and the 200-day. Targets wise on the upside, I'd first look at around the round number here, 83. We can see some candle wicks there forming some resistance. And on the downside, I'd look back towards 50-day simple moving average around 82. I like it that it's green. It shows that the market's liking that risk sentiment from overnight news with Putin and Macron. Let's take a quick look at the S&P 500. So I've drawn in these two sort of horizontal lines here, support resistance between 456 and 428. Those are the sort of bands the price is bumping along in here. Right now we saw that sort of short squeeze, rally higher, and we touched that 456. Price is just above its 200-day simple moving average at the moment. We'll see if that news filters through once US markets open a bit later, and see what happens. Futures are very slightly in the red for the S&P 500, but we'll see if that sentiment turns around as UK markets are up in the green. We'll see if later on the US cash index will turn green too. Moving on to gold, again, really impressed by gold's resilience despite the surge in real yields last week. Yeah, really impressed. It could be an inflation hedge. It could be a policy error pricing that they hike too fast and have to unwind it. It's back above that key 1.8 level. We're actually just shy of 120 at the moment, and we're fast approaching that 1.830 mark. The RSI is not near that 62, which has really capped price peaks previously. The target on the upside would be 1.830. But if we do see a really punchy number on Thursday from US inflation, then yeah, it could cause a serious repricing, and that could actually pressure gold lower, especially if the dollar also moves higher. And then moving on the downside, obviously 1.8 around that 50-day and 200-day simple moving average would be the target. And then moving on to spot Brent, we've seen Brent, it's run up in the straight line. It's done so well for a number of weeks, but we've seen it now struggle to get back above that trend line. We've got a nice red bearish candle there. The RSI is quite deeply overbought. It got up to just shy of 80 now. It's rolling low. We'll see what happens here. Target on the upside, I'd say, is about 95, and on the downside, I quite like we saw a bit of congestion here, a bit of stickiness around this $90 level. We've also got the 21-day exponential moving average not far away. And then lastly, finishing off with what we usually do, and that's the Fed Fund futures. We get a read for what the market's pricing. So we see here March is pricing, it's guaranteed now, basically 100% chance, north of 100%. Actually pricing a 50% chance of a March 50 basis point hike from my latest reading. And April 2022, we can see there's 1.7 hikes priced in July. we're above 3.5. September, we're almost 4.5. In December, we're 5.5. So yeah, very interesting times, quite hawkish. Speaking of hawkish central banks, I think pricing for the European rates market is very punchy at the moment. We're seeing a first hike, 10 basis points in June, and 50 basis points by the end of this year. So yeah, pretty rich, and I think that exposes the euro US dollar. Thanks. I hope you've enjoyed today's Technical Tuesdays. I'll see you all next week.